Hello and welcome. You have tuned into Market Fatafat on ET Now, a show where we get you all the buzzers in trade right now. In a short while from now, we will connect with our team of researchers as well as a technical expert for today. And with me, we have Snehi as well. A very good afternoon, Snehi. A great day coming in for the markets, and been a good afternoon for the benchmark indices as well, Snehi, because we are holding on to the good gains.
Absolutely.
And very near to the all-time high as well. Like very near to the day's high as well as the all-time high as well is not very far.
Absolutely. We went as close as 60 points to the all-time high. Very close, kissing distance away actually. And we've receded slightly under that, but not much to worry about because 0.8% higher is where we still are for the Nifty. As of now, about 25,020 whereabouts is where the Nifty 50 is as of now. Let's take a look at some other indices in trade as well. Sensex also absolutely in tandem with the Nifty, 0.8% gain coming on that front as well. You have Nifty Bank also comfortably 0.5% higher above that 51,200 mark as of now. India Wix slight uptick coming there, but not much to worry about because the market breadth seems to be holding on rather smartly. If you take a look at the broader markets as of now, Nifty mid cap slightly underperforming the benchmark indices. 0.4% higher is where it is, but in the green nonetheless. And Nifty small cap also 0.3% uptick coming in on that front as well. Let's quickly move on and take a look at some of the top buzzers as of now. You have names like Gujarat Petro, JM Financial, Honasa, Craftsman, all of these stocks anywhere between 9 and 13% gaining. And top losers also you have Zydus, Schaeffler, Sirma, PCBL. We'll be talking about all of these stocks and why they are gaining or losing in today's trading session. A little bit more detail just in a short while. But if you take a look at what is happening sectorally, all major sectors except Nifty PSU banks are in the green right now. Nifty IT is leading the sectoral movement. 1.5% higher is where Nifty IT is. Metal, Realty, Energy, Nifty Bank, FMCG, Auto, all of these counters in all of these indices are in fact in the green, but you only have Nifty PSU banks coming slightly under pressure as of now. In the red is where that index is. Bank of India, Union Bank and IOB are the ones that's tracking that index. But on that note, let's kickstart the show then. And on the research front, we have Ansh joining with us today. And on the technicals, we have Aditya Agarwala also joining us to give us a technical check of all the stocks that we'll be talking about. Hi, thank you so much for joining us. And Shrishti, I'm going to kickstart with the first stock today. And let's talk about a stock that has been gaining in trade today, and that is Bansal Wires. This stock has been in focus ever since the beginning of today's trading session. And let's understand why this has happened. You have Investec note coming in on Bansal Wires, where they've initiated a buy rating with a target price of 440 rupees per share. As of now, also stock holding on to those gains almost at the highest point of today's trading day. 6% higher is where Bansal Wires is right now. They believe that there is compelling competitive strengths that the company possesses. There is also impressive execution of the pipeline that they have. Strong earnings growth potential is something that they're also liking, and they've also undertaken 2 initiatives that are sharply more profitable but also entail slightly higher capex versus conventional businesses. Now, Investec sees 40% plus EBITDA CAGR of FY24 to FY27 with high teens post-tax return on capital valuation. That metric also looking good. Valuations look undemanding to Investec against a backdrop of strong growth potential, and business economics also looking sound as of now. So, well, that's the opinion coming in on Bansal Wires, 6% higher as of now.
Alright then, that's about Bansal Wires. But with this, let's move on. Let's shift focus to one of the pharma names that is buzzing in trade, and that is Shilpa Medicare. A positive news flow coming in indeed, where the company has announced successful completion of the phase 3 trial studies of one of their novel products that the company has been working on, a drug used in the treatment of patients suffering from NAFLD. That's actually related to the disease for non-alcoholic fatty liver disease, and NAFLD is the most common liver disease, and it's estimated to affect about 25% of the population in the world, and about 18.8 crore people suffering from this particular disease type in India itself. So fatty liver is very common, and Shilpa Medicare has gone ahead and done the study for a new drug for this one. The phase 3 trials show very promising results, and indeed the stock is gaining on the back of that. On an intraday basis, we have seen a move as much as 8% in Shilpa Medicare.
All right, let's move on then. And while we're talking about the pharma space continues to see decent growth without valuations being fully discounted. Now, additionally, agrochemicals are bottoming out. This is the word coming in from MK's Manish Sonthalia. Let's go across and hear out his rationale on the sector overall and what makes him bullish on the pharma space.
On a relative basis, pharmaceutical is still an area where there is decent growth and valuation has not yet got fully discounted. This comes on the back of destocking in the pharma space globally and also the specialty chemical space. Agrochemicals, by the way, is looking like bottoming out, not so much in specialty chemicals. And pharma obviously looks like having bottomed out in terms of destocking. In terms of Indian pharma, again, I would believe that there is a case for leaning more towards chronic as opposed to acute, because there you have a very good comfort on margins vis-a-vis acute portfolio. The entire APM market may be growing at 10 to 11% in value terms, 5 to 6% in volume terms. But I think the growth is going to be faster in the chronic segment as opposed to the acute segment. If you position yourselves early in the cycle, you're likely to be a beneficiary when the growth comes through in the next 1-2 years. Of course, the pipeline, the molecules, what is going to get commercialized, phase 3 clinical trials, what is the depth of the molecules out there, that will all determine. On the other hand, you'll have diagnostics, which again, to my mind, looks like a bit too stretched in terms of valuation, but definitely you have a play out there. And then obviously you have the US exports, and there again, the base exports as well as your specialty portfolio. That is all going to differentiate the entire pharma space.
All right, that was Manish Sontalia's take on the pharma space. But moving on, let's shift to the financial space then. And Aditya, very good afternoon to you. And let's talk about your first counter, and that is Chola Finance, the stock which is already up 3%. But how do you see the stock moving ahead?
Afternoon, Srishti. Thanks for having the show. I think it's on the verge of a breakout from a downward sloping channel. Approximately 1400, 1410, the immediate resistances for the stock. And the way the momentum has been there in the stock from the morning, I think it's a matter of time before the stock breaks out of that downward sloping channel. Once it breaks out of that channel, Srishti, I'm looking at a target of 1600 to about 1650 on the upside, with a good support on the downside close to about 1350. So the risk to reward is also in favor of going long in the stock at current levels. And if I plot RSI and MACD, both are showing positive divergences on multiple time frame charts, and MACD has shown a crossover above its trigger line. So overall, it looks like a healthy chart setup, and at current levels, the risk to reward is also in favor of going long, with a stop loss at 1350 and a target of 1600 to about 1650 on the upside.
Long call coming in on Chola Finance from Aditya. Thanks for that. Let's move on. Ansh, you've picked out KEC International. Now, this stock has been a buzz since morning. So tell us what's leading to this positive momentum that we're seeing in the stock and why you've picked it up.
Yes, so the company has received new orders worth rupees 1,079 crore in transmission, distribution and cable businesses in India, Middle East and America. Now, under transmission and distribution segment, they have got order in 3 areas. One, transmission lines order from a reputed private developer in India, Saudi and Oman. Second, upgradation of an existing transmission line in UAE. And third, supply of towers, hardware and poles in America. Now, under cable segment, the business has secured orders for supply of various types of cables in India and overseas. Also, if you see the chart, the stock seems to have given a breakout from its reverse head and shoulder pattern. Today in the morning, it was up by around 9%, but still it is trading with a gain of around 3%.
All right, that's the reason why KEC International is seen to be buzzing. But Snehi, let's talk about PTC India. That stock is too buzzing today.
Absolutely, PTC Industries, in fact, is the stock that we wish to highlight, because that stock is locked up 5% in upper circuit as of now. And Aerolite Technologies Limited, which is a wholly owned subsidiary of PTC Industries, has announced the acquisition of a hot rolling mill for manufacturing plates and sheets in titanium alloys for aerospace and defense applications. Now, this advanced capability being acquired from the US will be a further value addition of titanium alloy ingots and billets that will be produced by the subsidiary's upcoming Strategic Materials Technology Complex in Lucknow, node of the UP Defense Industrial Corridor. Now, with this hot rolling mill acquisition, the company will have a fully vertically integrated capability which covers the entire titanium alloy product value chain, with the company's offering covering big ingots, billets, bars, rods, castings, and now plates and sheets as well. So on the back of this acquisition, very positive news flow coming in. Stock locked in upper circuit 5% as we speak.
So that's about PTC Industries, why the stock is locked at an upper circuit. But one of the stocks in the large cap space that is surely buzzing from the IT space is Wipro. And Aditya, tell us, how are you looking at the movement in stock? One more breakout candidate?
Oh, definitely, Srishti. In fact, this is one stock which has finally started to show higher highs, higher lows, though after the numbers, stock had seen a bit of profit taking. But I think the most of the correction in the stock is over now, and it's on the verge of a breakout from an inverted head and shoulders neckline, which is close to about 530 odd levels. So the moment it starts to trade beyond 530, I think that gap area between 560 to 570 will get covered. And the way most of these IT stocks are performing, I think Wipro should be definitely looked at current levels. It offers an excellent risk to reward, again with a stop loss just below 500 odd levels. One should look for a target of 560 to about 570 on the upside. Plus the way the volume have been shaping up in the recent up moves, it clearly shows that smart money is getting into the stock. And of course, RSI and MACD both are showing positive divergences again. So overall, it's a very healthy looking chart setup. After a decent correction, I think it's now time to look at Wipro again.
Alright, so that's the view coming in on Wipro, but I'll let you stay with us as we slip into a very short break on this edition of Market Fatafat. More stocks to talk about on the other side of this break, so you stay tuned. Hi there, welcome back. Still watching Market Fatafat on ET now. Let's keep it going with all the big buzzers in today's trade. And now let's shift attention, talk about Zydus Life, because this stock has been tanking away in today's trading session. As of now, also almost 6% lower, and two news flows are coming in for the company. One's on the positive side, one on the negative side, but let's take a look at what these are. First up, Zydus Life has inked a deal with Perfect Day Inc. to acquire a 50% shareholding in Sterling Biotech. As per the deal, Perfect Day Inc., which is a Temasek portfolio company, will sell its 50% stake in Sterling Biotech for an undisclosed amount, and this joint venture will set up a manufacturing unit to produce fermented animal-free protein for global markets. Now, over the weekend, we had a development coming in one of Zydus Life Sciences competitors, which is Teva, and Citi has come out with a note on this development. They maintain a sell rating on Zydus Life with a target price of 890. They say Teva, which is the rival, now that company's website indicates that the company has received approval for the generic Ashoka HD, and Teva launched the product in the market and granted the company a 180-day product exclusivity. Now, this product contributed $140 to $160 million of sale in FY24 and 25% of EBITDA for Zydus. So this is a negative coming in for Zydus, and on the back of that, the stock is lower by almost 6%.
Well, certainly negative news flow coming in for Zydus, but keeping with the healthcare space, Narayana Health continues to maintain the capex guidance, and that's according to Sandhya J, who is Group CFO, wherein let's go across and listen what else she had to say about the company's capex roadmap.
For the past 2 years, we've spent about 1,000 crores each on capex, but a large part of it went into Cayman. Now, this year, most of the work on Cayman is completed, and we've indicated about 1,600 crores of capex. And we continue to maintain that kind of a trajectory will be our spend. However, our approach has been in terms of order of priority. We are taking a greenfield approach where we are building our capacities, or brownfield where we have existing facilities and we have ability to expand capacity. The reason being that is the most cost-effective way of scaling up capacity. Inorganic is there on the cards for us, but we are looking at the right price point and the right value that we can offer to our customers. And because the market is very hot in terms of the prices of inorganic assets, therefore our business cases are a little different from the probably different players in the market, and therefore inorganic comes lower in our priority list. So what will happen is that over the course of next maybe 3 years, still our capacities of all the investments we are doing are going to come up. we are going to see that our growths are going to be driven by organic throughput improvement, which we have already spoken about within our existing campuses.
All right, that's the word coming in from the management at Narayana Health. But Aditya, you've picked out SBI Card on the charts. Now, if I pull up these charts, you see last 6 months, YTD 1 year, all negative returns. So now do you think the consolidation phase is behind us, and now are you penciling an up move on this front?
I would like to believe so, Stay, because the stock has, as you mentioned, hasn't done much for itself. In fact, it's been a long consolidation for months now. 6 months, 7 months, if you take a look at the time frame, stock has just been consolidating sideways. What interesting I notice is stock is not correcting much, rather it's more of a consolidation, and see good volume action at lower levels, and it's on the verge of a breakup from its 200 DMA, very close to 200 DMA at 730, and it has made multiple attempts previously, Sneh, to cross its 200 DMA. I believe this time around, if it crosses its 200 DMA, whose likelihood is quite high this time around, looking at the chart setup. Once it does so, then I think stock can easily test levels of 780 to about 800 on the upside. 730 is the 200 DMA as we speak. If that is taken out decisively on good volumes, then I think one should definitely look at adding this stock in the portfolio, because as you mentioned, and you can see from the chart setup as well, the stock hasn't done much for itself in the last 6 to 8 months. Now it's time to look at the chart, the stock again. Maybe add it above 730, look for a target of 780, 800 on the upside, with the stop loss at 700 on the downside. Again, volume is good, and what is interesting is RSI on the higher time frame has started to inch higher and has crossed above the 40 level mark, which suggests that the bullishness is building up in the stock.
Right, so as per Aditya, the time has come to look back into SBI Cards. But moving on, let's shift focus to BHEL, because there's been a big order win news flow coming in for this particular company, where new order wins worth 11,000 crores being announced for BHEL, where the company did receive orders from Adani Power for one of its subsidiary named Mahan Energen Limited, and these projects are for the thermal power projects for states including Rajasthan as well as Madhya Pradesh. The order win is quite substantial in nature. That's for 11,000 crore rupees excluding GST. So that's the positive news flow coming in for BHEL. The stock did see a good spike on an intraday basis, but with the timeline correction, we are seeing the stock is trading almost flat right now. But nevertheless, a big and positive news flow coming in for BHEL.
All right, so that's why BHEL is in focus today. But Ansh, you've picked out Ashoka Buildcon, and that is also on the back of an order win. So take us through that.
Yes, so the company has informed that they had actually submitted bid to MRDA for a project, and now they have emerged as the lowest bidder for this project. Now, the project worth is around 478 crore and the period for which is 36 months. The work is designing and construction of road. Also, if you see on chart, then today morning it started with good 5% of gain, post which it saw some correction, but it's still managing to trade in green by over 1%. But overall, the stock is actually trading within a consolidation phase from last 14 sessions.
Right, that's a news flow on Ashoka Buildcon. But moving on, we spoke with Rajesh Bhatia, who is the CIO at ITI Mutual Fund, where he says that defense and railway stocks look expensive, but it is a multi-year narrative. Let's go across and listen into him.
There has been a structural shift in how the defense and railway companies, the railway capex has gone up 10 times in the last few years. And I think the narrative on defense is that you'd have to indigenize, you'd have to stop imports. Not only that, you have targets for exports. So my sense is that, and then there is a very steady, the need, given the global context and given the geopolitical considerations, we will need to step up capital expenditure as far as defense is concerned. So, and there is a preference for domestic companies. So my sense is that this is a narrative which is going to be a multi-year narrative, but I think the valuations are definitely not comfortable at this moment.
Okay, let's move on from that. And Aditya, you've picked out Page Industries for our viewers. How is this looking like on the charts? Because it's a slow mover, but it's moving nonetheless. So what's your view here?
Absolutely, Sneh. Off late it has been moving, and I think so after a good consolidation, stock did take support at the 20 DMA. From there, it's bounced back again. I think stock can easily test levels of 22,700, about 42,700, about 43,000 on the upside. And if 43,000 is also taken taken out 46,000 can be seen on the stock. So this is more of a positional trade. I think traders should definitely look at adding this stock in the portfolio at least for a couple of quarters, and look for a target of at least 45,000 to 46,000 on the upside, 43 being immediate resistance. If that is taken out, definitely you'll have higher levels in the stock. And recently we had seen higher highs, higher lows constantly being seen in the stocks. So overall, it's a bullish looking setup with a stop loss just below 41,000. One should definitely look at adding this in the portfolio.
Alright, that's the day coming in on Page Industries. But with this, viewers, it's once again time to slip into a very short break in this additional Market Fatafat. Don't go anywhere. We'll be right back.
If you like this video, then like, share and subscribe to ET Now.